Ladies and gentlemen of the crypto space, we're live on a Monday, November 28th at 11:31 a.m. Not bad, on time today. What have we learned? Who's in control? Well, we know who's in control, and it's clearly not the people that are engaging with markets. Obviously, it's a much higher level at the policy level. And what have we learned is one of the most broad statements I think I could make at this point in time. Everyone's going through their emotional journey, and we've learned an immense amount of things over the years. We've learned that humans will be humans, and the vast majority of humans are not critical in their decision making capacity. And most importantly, we've learned that we have to be critical and make rational choices to navigate an irrational market. Now, most importantly, I think folks need to always hear it as much as possible. The directionality of the market persists until capitulation, and the crypto space has capitulated in many regards, but will be dragged underwater significantly by the macroeconomic situation. And the best way to express where we are macroeconomically is the inversions in the bond market and the Eurodollar futures market. It's coming. It's not here. Capitulation. And it's not going to be pretty. And the most important thing we've learned is time. And time is the most difficult characteristic of a market to process and navigate effectively. Time will turn $1 million into $100 million. And it will not do that if there's excess diversification. It will do that with a high level of concentration in the right choice. And the right choice isn't necessarily something that's quantitative. There's an aspect of deduction required to identify the potential right choice. There is degrees of calculation that can go into identifying a potential right choice, and that plays significantly into our topics of conversation. And what's the most critical attribute? Survivability. What survives? What has meaning and significance? True significance, where it has a service and it provides a function and a utility to an environment. Because what happens in an environment with a component and a utility that other people want to use? That means when you have your cycles play out, participants come back in and they want to engage. They want to have activity with these systems that have shown the most important attribute of survivability: resilience, integrity. And what's the biggest component to integrity? Critical immutability. It's not a person, it's software. So there's no that's the biggest thing. Not a person, it has to be software. Why? Because throughout history, people fail us. Humans cannot be trusted, which is why I express the sentiment I do about corporate America. And obviously, there's plenty of corporations that are successful, and there's plenty of ways to navigate traditional equities markets, but that is what is unique about the crypto markets. There is no human with the particular protocols that are deployed in a critically immutable fashion. That's what we've tried to identify. Characteristics of survivability. Critical immutability, that there's no human required for the software to execute, for the software to survive. So if the software survives, it will be seen as infrastructure. There's no target to hang. There's no person to attack that can affect the functionality of a system. That's unique. I mean, look what goes on with Elon and Twitter and Tesla. They attack him. Look what goes on with Danny and Abracadabra and Andre and whatever, all the shit that he released. The person gets attacked. It's because humans like to place blame. Who the fuck are you going to blame when a protocol survives and just depreciates and goes through all the volatility and insanity of the market? There's no one to blame. It's not a person. If you can't blame a person, it's a different paradigm. And that is what I find most fascinating. That is what is different this time. And it's significantly different. So what's pertinent is time in that equation and understanding that the macro situation says everyone is fucked. It's going to be extremely volatile. The question is what survives. This isn't a conversation today about deployment in a market where we could all expect everything to depreciate, but this is about the equation of time and concentration and what happens when anything survives. What is the significance of infrastructure and how is it viewed by people that want to own a piece of infrastructure and protocols that want to create an enterprise that want to consume a piece of infrastructure that has survived? Where does the attention go? The attention goes to the shit that survived. Why? Because what happened with the last cycles? 17, 18, 18 and 19, nothing survived except few, very few. And look, Ethereum was one of the survivors. And what happened? Where did everyone go to deploy? Syscoin was a little bit behind, and they came online. It was late 2020, maybe 2021, mid 2021 with an EVM. So it's just an EVM compatible um, blockchain at this point. But it survived, and I think that is a meaningful attribute. And there's very few things that survived from 18 and 19. That broad macroeconomic cycle, and that's where we are today. We're just trying to figure out what survives. It's not what's going to appreciate, it's what merely survives. Let's pop it over to the main screen, see who's in the stream. Kaysen's in the house. Fugu managed to catch a live stream. It's a pleasure. Chris Ross, DCN Curve. So, I'm a highly concentrated person at this point, and folks know I've taken smaller positions, a fair amount of smaller positions outside of the core of the portfolio. Um, this is not a time to extend out on the risk curve and expect returns and expect things to not depreciate. This is when we know it's a negative sum game. It's not. It's worse than a zero sum game. Predators will take your money. Stablecoin liquidity is decreasing. There's more and more reason for capital outflow of this emerging market where bonds are yielding 3.7% on the 10-year, and if you go shorter, go down to the 1-year, at 4.7% of risk-free yield. So Aave is dead. There's has zero survivability characteristics at this point. It's more intertwined with or more aligned with centralization as compared to decentralization, albeit it does have its IPFS deploy, but they have overtones of Maker and what they're trying to do as compared to permissionless access and critical immutability, such that there's no target. There's no such thing as enforcement. It's deployed, and there's nothing anyone's going to do about it. So no one's going to deploy stables for whatever fraction of a bullshit percent is going around there in that money market. It's a money market when you can get 4.7% on 1-year U.S. government bonds. It's still going up. This is an extraordinary chart. The yield curves are so inverted, everything is distorted, and that storm has yet to come. Extraordinary times. Risky cryptos in the house. Django, a pleasure. Chris, have you heard about Reggie Middleton's lawsuit on Coinbase? 350 mil. He alleges they're infringing on his IP, his foundational patents on DeFi. Okay, well, patents are a meaningful part of a civil society. How many times do we see various protocols take components and use them for themselves and iterate, which is not necessarily a bad thing. I'm not too fond of the patent system. It's more useful in traditional in meat space because it takes investors and sometimes years to spin up manufacturing and supply chains and distribution, whereas in software, you're able to get that lendiness early. If you're the first to deploy, it's going to be building reputation and brand, and it gets entrenched. So if someone uses a component of a protocol, which has happened many times, so as a saddle and curve, it's irrelevant because it doesn't you can't copy lendiness, you cannot copy brand and reputation. So it is what it is. Look, there's your volatility. If Coinbase has issues, either their coin um, asset or as an enterprise, that'll have a significant impact on potentially liquidity in the space and volatility, surely, as fear spreads and all the just sometimes, very often, arbitrary narratives. Because what the fuck does anything in meat space have to do, or traditional enterprise have to do with the enterprise in the digital space? This is a global market. Almost all the narratives that play into the depreciation that we've seen are not really warranted. It's just that they carry over from humans being humans, humans seeing things through the lens of traditional finance, and humans not really allocating capital to this space for the appropriate reasons. Um, that just happens time and time again. This is exactly why we see charts go vertical 10x on the money, and then they just come down because they deploy capital because they wanted capital gains. Capital gains is the most frustrating means of capitalization, in my opinion. There's plenty of ways to capitalize, or primarily my preferred way of capitalizing is ownership of enterprise, and you're capturing their cash flow because the enterprise is providing a product and a service, a functional utility to a marketplace. That's meaningful capitalization. Capital gains is literally is give me, give me, give me. It's a cash grab. That's what the stock market is. It's just such a petty means of engagement. You know, Buffett doesn't like the crypto space, and that's fine. But I talk about him often because there's the word an investor, and you want to own something. Don't you want to own something meaningful, something that has a potential significance as a utility for society, and that is not what caused significant appreciation in 2020 and 2021. That is shallow, immature, juvenile humans just thinking they could take money from somebody else if they're quicker and faster. Buy early, sell before the pump 10x. And I don't like that. And I don't like that mentality. And I certainly don't subscribe to that methodology. And that is the core of the entire conversation we had over the years. And I've said time and time again, I will underperform the markets, but I will survive and I will outperform over the long term. Was it 90% of people are in a loss from 2020, or whatever the hell the statistic is? The vast majority of people are gone. Oh, well, I can't expect everyone to listen to me. We have a very small subscriber count, but surely we have a story that we tell that most people don't appreciate and not interested in. The long-term ownership and investing of the narrative that we talk about is not desirable. People love casinos. They love to go to Las Vegas and Atlantic City, and they think life is easy. And they're like, "Oh, I'm going to take a gamble to make life easier." Fighting over these dollars in a negative sum game. Negative sum. Look at them too. Negative sum game. Capital is leaving the system, albeit this is relatively trivial compared to the amount that it has increased. But the point is, this is the first time in quite a long time that there's a year-over-year decline in M2. So this is going to have unprecedented consequences. And base money, quite an extraordinary decline. It took 2014, August 2014, to have for $800 billion decline in M0. Base money, $6 trillion decline. It took 2014 October. It took years for the decline in M0, and they did this in months, less than a year. Less than a year, they took $1 trillion out of the market, 20%, give or take, 15, 18, something like that. It's going to have ripple effects. What you'll see is resonance, which is a natural phenomena, and you have the decline, and they're going to have to juice liquidity in the system before things start falling apart, and it just propagates higher and higher. Resonance, sound resonance, acoustic resonance. And that's what we've seen time and time again throughout history. And there's a reason this chart does this. That's resonance. Has resonance written all over it. Higher peaks, lower troughs. It's an extraordinary chart. It's a different world. And maybe we get a clearer presentation of resonance, but this is resonance. Very macro chart. It's over many years, over a decade. But that is very obvious at this point that this natural phenomena of resonance is to occur again. Anyway, I'm uh, I'm being tepid in my presentation, restrained in my presentation, because clearly there's a lot of emotions going on. I wish the market was a little bit more appreciative of the systems that we all know have the attribute of survivability and have significance, but they're being fought very aggressively by regulators that want control. Believe me, they just simply want control. It's not about protection. They want taxation. They want a piece of the revenue stream for themselves, 20, 30%, and which means they need to identify all the individuals that are participating to enforce taxation. And that is why everything is occurring. That's why all these regulatory conversations are occurring. How do we control it? How do we maintain order? Protection. Yeah, clearly that occurred in the equities markets over the last 2 years. Protection. Um, Ding ding, it's a pleasure. I'm here. I'm not going anywhere. This is the place to be. There is no reason any of my narratives are invalidated at all. Depreciation is only a component of narrative invalidation, and the things that I look at, the things that we look at, have not depreciated to the point of narrative invalidation. If anything, the volume through the protocols has only contributed to narrative validation. That there's systemic infrastructure. When shit hits the fan, look at the protocols that are being used. What protocols are being used? When the wheels fall off, you get to see what was significant. You get to see what systems everyone went to because they were trusted and they wanted to consume them for their utility. So we've seen over the last 2 weeks with FTX and BlockFi is going to cause some ripples and Genesis is going to have fallout and the inverted curves is going to cause a shit show in the equities markets as bonds finally go risk on. And that's going to have impacts on liquidity. And that's going to draw liquidity out of risk and it's going to make it protected. in the bond market, which is the traditional risk-off move. And this is going to have catastrophic consequences in emerging markets across the planet, especially as M2 and M0 come down further. And this encourages, bear in mind, this discourages malinvestment and encourages more well thought out investment. During recessions, there's plenty of venture capital. It's never zero. It's just that the venture capital is deployed in an increasingly critical fashion to things that are more meaningful. They are concentrating their bets as well. What we do when we're allocating to every stock market investor is a venture capitalist. It's all venture capital. If you're an individual buying stocks and crypto, it's venture capital. The problem is you're late, especially for the vast majority of the crypto space. That was a complete venture capital shit show where the general public was used as exit liquidity almost across the board, whether it was professional venture capital or the rug pull, which is the same thing. You had capital brought in either by the team or by some small actors that acted as an independent venture capitalist, and the general public bought it when it went on the open market, and they were used as exit liquidity by the early venture capital investors. And that's a rug pull by definition. So the other way, a rug pull is by definition technically venture capital exit. And then when the protocol has no significance, once the venture capitalist exit and the market tanks, the protocol dies too, because it was bullshit to start with. So all of this that you've seen over the last 2 years is just decades of traditional equities market compressed into 2 years at warp speed, at digital speed, at no regulation speed. So it's not like you're seeing anything new. This happens time and time again. It will continue to happen because the general public will spoon fed and they will buy bullshit over and over again, missing the forest for the trees, never seeing the forest, which is what we discuss, the forest, what survives, what is infrastructure, what will people use when shit hits the fan, when times are good. The shit that people will use is the most meaningful stuff. The difference is in equities land, you're dealing with products and services, B2B, B2C. You can't own a toll road. That's what I want to own. I want to own a road and put a goddamn toll on it so whoever goes through the toll pays me. Can't own a forex market in traditional finance. Now, you can be critical all you want from a traditional financial lens, but that's what you own in the crypto space. You own a piece of a damn forex market and you're getting trading fees. The only people that got trading fees in traditional finance is the brokerage houses. Fidelity, Schwab, whatever. Centralized exchanges, trading fees. You're getting trading fees in the crypto space. You own a piece of a goddamn toll road. You own a piece of a brokerage house. When you own Fidelity shares or whatever brokerage house equities, you're getting shit. You're getting nothing. You're getting used as exit liquidity when the damn corporation does a capital raise and dilutes the shares, share issuance, and sells it, dumps it on the general public. And just like suckers throughout history, they buy it because they think some other schmuck is going to buy it after them. So there has to be a better way, which is what I've learned from Buffett. There is a better way, and it's just called not being an idiot. Owning things that provide utility, owning things that pay frickin' dividends from the cash flow. That's all how he makes his money. It's all from cash flow. You know, with those billions he gets, the amount of money he gets from dividends is extraordinary. Bit of a diamond structure forming on curve. Nice to see. It's not the prettiest diamond, but there's another couple of days, maybe a week or two, we'll start to see a better pattern. But you know, it looks good. A lot of folks would see this chart and be like, "Holy crap, it's down." Yes, it's down because the market is irrational. It's irrelevant. Why is it irrelevant? Because he can't sell it. If you have had the moxie to engage with the market differently, not as a position but as a purchase, and that's the type of punt that you found yourself capable of taking, serenity now, serenity, the prayer says, you can't do shit about this. You own a piece. You can't sell it. You'll see what it does in the coming years, and gratefully, between now and then, it's paying you. That's the different way. I needed a way to engage with the bullshit that I used to do when I was young, helping my father, God rest his soul, with the equities market, and he thought he could be a day trader. Every kid in college thinks they could be a day trader. Meanwhile, no one tells them what they're doing is taking money from other people because they were first and someone else was after them, and they said, fuck you, I'm taking that. That's what capital gains is, and that is bullshit. Listen, Curve and Balancer and other AMMs that are newer, and there's plenty of narrative. GMX is cool, and there's plenty of things to say that are cool and interesting and meaningful systems, but I'm not fond of a lot of token drops. I'm not fond of airdrops. There has to be different token distribution methods. Don't engage with a protocol because of an airdrop. That does not offer or say in any way that it's a significant protocol just because it's an airdrop. Maybe you could capitalize a little bit, but from an investment standpoint, it's going to be sold because someone else is going to sell, and once someone else sells, that's what creates the feedback loop of everyone selling. So that is why time and time again my focus is on the historic systems. The systems that don't have airdrops. We're past that. They're entrenched in many regards because we don't have to deal with that bullshit getting off the ground. Uh, Activities that new systems have to go through. The old systems won't have to go through it. And meanwhile, everyone's chasing the new systems in a 2-year-old marketplace where the old systems still are technically extremely new. Oh, something new is going to come along better. In 2 years' time, something new is going to come along better. Better. What's with this endless pursuit of better in a matter of 2 years' time? The irrationality is stupefying. CryptoTube, will your Tap Talk be on Spotify? Probably. That was a very good conversation. I appreciate the structure of the protocol. I look forward to seeing what it does. I appreciate that the conversation was very educational. It was topics that were trying to inform people about what we're doing and why we're doing it. And inherent, and especially the way I'm talking today, inherent in the conversation we had was the risks that everyone's taking. And that cash is everything. This game is scored in dollars. You either have them or you don't. So the whole point of this is these systems to give you dollars. That's why it's so completely irrational to own Bitcoin as while the world is dollar denominated. There's so many irrational arguments that Bitcoiners make. Oh, what's going to survive in 100 years? Who gives a shit what's going to survive in 100 years? Fine, if you're a multi-billionaire, that's a consideration. But if you got 10 grand in a bank account, you don't give a shit what's going to happen in 100 years. Probably shouldn't even give a shit what's going to happen in 10 years. Probably, they talk about 5-year plans. 5 years is a good time horizon. And if you get a 5x or a 10x on Bitcoin, oh my God, it's not going to change your life. 10 grand to 50 grand or 100 grand does not change your life, and nobody's going to sell it on a 10x. Anyone who buys Bitcoin, 10 grand worth of Bitcoin now, and it turns into 100 grand, nobody's going to sell it because they're going to be like, Bitcoin's going to change the world. Everyone's going to own Bitcoin. Every argument possible to not sell it will occur, and no person with such a relatively small portfolio is going to sell it at 100 grand, given that they bought a 10 grand position, it turns to 100. No one will sell it. Why? Because that has happened. How many cycles? How many cycles has that happened? And it will happen again. It's an irrational investment for the vast majority of market actors. Now, clearly, the vast majority of my conversation is from mostly a middle class U.S. citizen. There's a different perspective to have depending on where you are around the world, depending on your income level, depending on the hyperinflationary state of your nation's monetary system. So there's considerations in that regard as well. But the vast majority allocate to most assets for the wrong reasons. And the Buffett methodology has nothing to do with equities. It has to do with enterprise and business ownership. It's just that he's 90,000 years old and he doesn't need to think about shit, and he's got billions and billions of dollars of responsibility. And that's cool. And I like the way he thinks, and he's right. The world would be a better place if it was traditional value investing, where you have an enterprise that survives a period of austerity, a period of deflation, that's cash flow positive, and the P&E drops to less than 1. That's a steal. They're cash flow positive. They got no debt on the balance sheet. The enterprise is going to survive. Clearly, they're going to do better in the future. And this is just the simplest, minor description of Buffett's mentality. You buy at a discount something that survives or has the attributes of survivability. Tapsy, how are you, my friend? Killis, good morning. No, you just still have the same reservations on Binance Network. Zero interest. Zero. I have no interest in it. What's the point of it? You go out. It was the first to receive exuberance post Ethereum catching exuberance. More significant is Arbitrum and Optimism and ZK Sync. More significant is the Cosmos Hub network, because they have integrations, at least with sovereign nations. Polkadot has basically very little activity, but even that's more interesting than Binance Smart Chain. It's just a corporate-controlled EVM network. Syscoin is more interesting. Now, bear in mind, what I'm describing as more interesting as is more systemic significance. And what is systemically significant doesn't necessarily outperform, but that's irrelevant. The price is irrelevant to systemic significance many times. What is better technology doesn't necessarily outperform many times. A great technology doesn't always make a great investment because exuberance, because of the irrational nature of market actors. But what happens is great technology is like placing a quarter on the train tracks when the train is 1,000 miles away. The odds are, maybe the train switches tracks, but there's a good chance that the train is on the same track and it's going to hit the quarter. But at least you're placing the damn quarter on the train track, waiting for the train to come to you, which takes time, which takes years. When you're doing your stupid capital gains and you're trying to take money from someone else that doesn't understand what the fuck they're doing, that's throwing quarters at the train tracks. Don't throw quarters at the train tracks. In this environment, clearly we've had conversations historically, and we'll have them again, when you could throw quarters at the train tracks and you could take other people's money. I'm not going to say no during a period of irrational exuberance when people that shouldn't be investing are investing and you have an opportunity to relatively easily take their money. But this is the furthest from the time to even consider that type of market engagement. This is a time when we're humble and appreciative of the dollars that we have, be it credits in a bank account or digital euro dollars in a crypto account, and cash flow positive digital enterprise, or cash flow from hopefully equities representing traditional enterprise that will survive. You're getting dividends from them. Maybe you own REITs. And obviously, what's the most important cash flow source, which is your skill set and your capacity to be an employee and contribute to somewhat of an enterprise. um, James, hey James, how are you? Opinion on SNX going into the future. SNX has a high likelihood of surviving. It's the dominant infrastructure on optimism. I think it's mutable. It's not, but it's historic. So there's a tremendous amount of lindiness associated with the protocol. I hope everyone knows that the original incentive contracts on like an LP were all created by synthetics. Synthetics started a good part of all of DeFi, and the vast majority of like incentive contracts either are the original synthetics contract or a derivative of it. So synthetics is a historic protocol. Now bear in mind, it has departed from mainnet, and it is part of the optimism narrative, and there's a significantly less degree of liquidity on optimism, and you have the whole bridging narrative, and that's why I've historically deployed to synthetics, but that is why I'm not exposed to it, because this is a period where everything is going to contract to the base layer, and it's going to contract to the networks where the most liquidity is, and that's mainnet. So you're going to have a significant amount of volatility on anything other than Ethereum mainnet. And by volatility, I mean shit is going to fucking go down in price. I like synthetics. I've had positions and I would love to have a position. I don't trust market actors on anything other than mainnet, and I barely trust market actors on mainnet. That's my opinion. And I'm not interested in gambling right now. And that's why I do have positions. I have a position on Polygon with Qidao. It's not a position. It was a purchase. That shit's locked. It's going nowhere. The problem with synthetics is you can't permanently lock it. I have an opinion that I've discussed where a permanently locked position is something that I want to engage with the most. Permanently locked positions. Why? Because that's something that doesn't exist in traditional finance. You could invest in a bond, give cash to the government, they'll give you the bond, you can sell the fucking bond to any schmuck that'll buy it. It's not a permanently locked position. So, what is novel? What is unique? What is something that you can do in the crypto markets that you can't do anywhere else throughout history? And that is a high duration locked position. So duration is a meaningful consideration or a meaningful uh, component of traditional finance. It's everything that we're talking about with regard to these yield curve inversions. Because long duration is supposed to have a higher yield than short duration, so that's why everything's all fucked up. So by taking that concept of duration and time and making it a permanent or forced position, that's unique. That's something that you could do that you could never do in history. So that's why folks are hesitant to engage with them. Oh, I want to be able to sell it. Yeah, of course you want to be able to sell it because someone else is going to sell it. But if you can't sell it, serenity prayer kicks in. You made a purchase. You can't sell it. So the only thing that you could possibly consider is does it survive and how much is it paying you on a weekly basis? That's it. It simplifies everything. And it's consistent with Buffett mentality. Everything else is the same. Capital gains is the same. It's identical with equities, which is a stupid way to engage with markets. And I needed something sustainable. So now more than ever, my methodology reminds me and just is so apparently sustainable compared to every other way to engage with markets. And this is what gets me through the day. That I know it's rational mentality, rational methodology, and I will be here in the coming years with the critically immutable protocols that will survive. You can't change the code, so I'll be here. And if someone is gambling and they're like, oh, I got to sell because I got to pay bills, they're not going to be here. That's not sustainable. I will be here. Yearn's Y curve is interesting. I'm not fond of the liquid wrapper pegs. It's not a peg. They're not pegs, but whether their range, they're volatile. How if you're getting yield compounded and you need to capitalize, you're going to sell it, so that puts pressure out, and the only way that balances is with pressure in. So I'm not fond of the liquid wrappers at all. It is what it is. Do they compound? Well, sure, they do. They do what I do just automatically, and they take a cut. So they have an interesting business. So YFI is potentially interesting in that regard, especially with their tokenomics pivot. So YFI is something that has come back on my radar. Yeah. And that's why they call the Captain Rational. Thank you, Killis. We've been at this a long time. You've been around a long time. I appreciate you and everyone that's stuck around. Dan, in my opinion, a bear market like this, selling into unsustainable is the way to go. Oh, unliquidatable is the way to go for capital preservation. Well, you need enough cash to pay your bills and service your personal debt obligations. You have income from work, so hopefully people are solvent where they don't spend as much as they make. Therefore, this entire game is a calculation of what you do with capital that we're so humble to have accumulated over the years. And hopefully everyone right now has more money than they did in 2020, 2019, and 2018, and 2016, and 2014. And that's how you measure your success. You should have more money, at least every, every 2 years. But hopefully every year you should have more money year over year. Now, clearly with 2020 and 2021, you could have significantly more money year over year and less money over like a 1-2 year span, but you should have more money traversing that period of irrational exuberance. And if you do, you did well. That's what matters. Yeah, sure, your whole net worth will go up 10x during a period of bullshit, irrational exuberance. But if you're here right now and you have significantly more money than you did in 2020 and 2019, that means you made good choices. And that's meaningful. That means you're doing something different than 90% of the schmucks in the crypto space that buy Dogecoin and bullshit, and they're doing things merely so they can take money from other people. No, you make good choices. That's peering through the bullshit. That's meaningful. Unsustainable pumps. Yes, Dan. Uh, Pak Angel, do you like Stargate now that it's paying good dividends? Is Stargate paying good dividends? I have a fair amount of Stargate in escrow and locked. I got to look into that. Yeah, I like Stargate, period. I think Stargate and is quite meaningful. Layer zero is even more meaningful from a messaging standpoint, but Stargate, is more meaningful than multi-chain. Multi-chain has the lendiness. They were the first. They get the volume. It's like the first always gets more attention. So from a technology standpoint, layer zero is very meaningful, and Stargate is just consumes layer zero. So yes, I very much like what they have built, and I think it will play a role in the future of these systems. Will you participate with tapioca options? Well, it's not an airdrop. That's how you get incentives. You don't get incentives as, oh, give me a token. No, you have to buy the token. So the protocol is taking the options yield design from fixed forex that Andre created, which is an immutable protocol. I think that you could turn it on and off, or I think there's degrees of flexibility, but it's still there and it's still functioning. And I think he's waiting. That boy's not going away. That boy's a capitalist, and he has billions and billions of dollars. Um, I think he's waiting for solidly mainnet, and I think we have certainly have not seen the last of Andre. Um, solidly has got the list of partners for launch. So uh, I think um, I think we're going to see some interesting things. A lot of clearly it was a flop on Phantom, but I think we're going to see some interesting things. Um, my extent of participation, CryptoTube with Tapioca, will be with a staked and locked position, and I will hopefully capitalize on cash flow that the system makes. Now that's it. If I do VC and if I'm going to own a position early and deploy maybe seed capital, I have a position with Hero, HXRO on Solana, and that is locked. That is multi-year lock. If I'm going to do anything, that's how I'm going to do it. I am not going to do stupid attempts to capitalize in the short term. I am going to have a long-term alignment with a protocol. It's going to be a punt, and all you need is one big win. It changes your life. So they're going to be concentrated capital allocations, concentrated bets, maximum long duration as what the protocol offers, with no intention to liquidate the core principal. You can't. And I focus on cash flow because that is the goal that I want. I want to own things that pay me on a weekly basis. Simple. Everyone plays that stupid lottery game. $5,000 a week for life. Yeah, okay. Well, instead of scratching a frickin' ticket, at least I'm making a choice based on a rational inspection and analysis of a relatively sophisticated piece of software. How about that? Noah did the pre-sale on Stargate, if I'm not mistaken. Yes, I did. That's how I learned about Stargate. So I have that, but I also I doubled down on that position, which obviously has depreciated significantly. But I have about double that original position, and that's all locked for max amount of time, and that's the deal in that regard. 38 people in the stream, 14 likes. We can do better. All right, ladies and gentlemen, Monday, 12:20 p.m. Lengthy stream. Good topic. Same topic every week. Same time, same channel. Something like that. But I appreciate all of you, and I'm proud of folks that survive. I'm proud of folks that think different than other people, and it's okay to experience depreciation, And it's not okay to not have enough capital to service your debt obligations and to pay your bills. So make sure you're not hope that hope has no place in capital management. Make sure you are not hoping the market goes up. Make sure you're not buying because it's down and it's going to turn around and in 5 years time it's going to be higher than it is. Make sure you're buying, if you do, for the right reason, because maybe it produces cash flow. Oh, make sure you do rational things. And over the years, rationality will do you well. So thank you all. I will see you all on Friday. I wish you all a good week. Monday, 12:21 p.m. on the 28th. December is coming up. We have Christmas soon. Anyway, you know the drill. After party on Discord for the most rational community in the entire crypto space. I appreciate all of you in there. I'm always in there. See you guys. Peace.